Hello, ladies and gentlemen. Good evening to you, and welcome to another session. And in this video, we shall be doing a follow up analysis on the US oil and talking about follow ups. I would like to share with you what happened last week, how we took advantage of the trading opportunities that the market presented to us last week. Remember, if you look at the daily commentaries we had here at the beginning of the week, we had a situation where we identified a possible bearish momentum if price breaks down the $80 level, or a possible buy momentum if price climbs above the $80 40 cent. And in fact, the former is what happened here. We saw the breakdown of the $80 level, which would give us a mature situation to join that decline. And in fact, we joined that move to the downside. We had another position right below the $79 40 cent level, as you can see here, and we rode the move all the way down. See how we took advantage of another opportunity below the $78 75 cent. We took another one at the $78 area, and we rode it all the way into the 77, where we also had another position right below the structure before we started witnessing buy pressure coming in at that point. In fact, we had multiple entries on the US oil last week, and we were able to make over 1,000 pips in profit. And congrats to those who are part of this trading journey as we head ahead into the new week with fresh new perspective on the US oil. So diving right back into the daily time frame here, the first thing we observed here in the last was it not the last 6 months on the US Hall is the fact that price action has been on a bearish momentum. And in that regard, I was able to identify this bearish trend line after connecting the series of lower highs here, as you can see on your screen right now. Now, then, if we look into what has been happening here since the month of September, we saw how price action was caught within a channel that is between the $93.50 level, which was the resistant level of the channel, and then the $75 level, which is serving as the demand niche for the channel throughout that 3 month span space of time. Then something interesting happened during the first week of December rather. We had the breakdown of that demand zone at the $75 level to give us a sign that the sellers are still very strong in this market. And what happened afterward was quite interesting. As soon as price tested the $70 level, we saw bullish momentum that brought price right back into the $80 area, and that was the level where price ended for last year. So soon as the new year began, we started witnessing selling pressure around the $80 level, sharing a confluence with that bearish trend line one more time to emphasize the strength of the sellers at this point. And in fact, we were lucky enough to take advantage of this bearish momentum as we were able to take this over 700 pips move to the downside, breaking down the $75 level one more time. At least this is the second time it was broken in the space of 1 month. So at this point in time, what is going to be our plan for the new week? Well, if you look at the current structure we are in right now, you will notice that price action is currently trading right below this demand zone. Remember, we identified this demand zone earlier, and during the course of last week trading session, we saw the breakdown of the $75 level here to emphasize the strength of the sellers, breaking down that demand zone. And at this point in time, we should be thinking of continuing to sell the US oil. But now, how do we sell the US oil with this kind of setup? Well, the first thing I want to look forward to is a possible situation where price might likely come back to do a retest of the $75 level to incite another wave of bearish momentum, where the breakdown of the $70 level could give us another opportunity to add more position to our existing trade. And there is also the possibility that price might come back to retest the $80 area, which also shares a confluence with the bearish trend line before that bearish move will be coming in at that point. So these are the views I want us to be looking at for this week. And in order to have a better perspective into what is really going on around the structure here, it's appropriate that we scale down to a much lower time frame. And in that regard, I was able to cite a couple of structures that we could use to guide our trading activities right here on the 4 hours time frame. So zooming down to the 4 hours time frame, well, this is the first thing we observed last week. I shared this on my previous video last week, and if you missed out on that video, I will be linking you to that video right at the top right hand side of your screen. You can follow that link and it will take you right to that video. So right now we have the situation here where price was caught within a descending channel since the month of September stroke October. We saw the resistant level of the descending channel here and then the support level of that descending channel around the structure. And what happened during the month of the second or third week of the month of December was this breakout of the resistant level of descending channel to give us a clue that buyers might likely be coming in at this point. And like I showed you on the daily time frame, I showed you how important the $80 level is. And if you look at what we have here, you can see how that level was rejecting by pressure as every attempt by the buyers to break above that structure was met with strong resistance from the sellers. And as you can see here, the sell momentum began at the beginning of this year, breaking down that bullish trend line, breaking down the previous demand zone that we had here during the um, later part of last year. We saw that level was a demand zone and it was broken to the downside. Now we had a situation following the impulsive move to the downside here, and as soon as price tested the $73 level, we are caught within a situation where price is within a flat channel at this point, hereby emphasizing the indecision in this market right now. So there are two couple of scenarios that we might want to be looking forward to at this point during the new week. Well, the first one is that this channel could turn out to be a trend continuation pattern, something like a bearish rectangular pattern, where a breakdown of that structure of the $73 level coincides another wave of bearish momentum. However, if price breaks out of the $75 level, then this will be turning out to be a reversal pattern where a retest of structure should be giving us an opportunity to join that rally to the upside with a take profit target sitting somewhere around the $80 level, a level which also shares a confluence with the bullish trend line here that was broken during the course of last week's trading session. And this might likely lead to another wave of bearish momentum, we never can tell, or a breakout of the $80 level coincides another opportunity to add more position to our existing trade. So these are my views here on the US oil, but be rest assured that I will be jumping right in the comment section after monitoring how participants in this market will be reacting to the current structure here during the early hours of the new week. I hope this video has been of immense help in making your personal decision on the US oil for this week. And if it did, kindly support this project by clicking the like button. You would also want to follow me on my TradingView platform at Dark Sherry, spelled DARCSHERRY, so that you don't miss out on the regular updates I normally share in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you right here in the comment section on Monday as we get ourselves prepared for the new week. Do have a wonderful evening. Bye bye.